Okay, this is example number 2 of day trading with double volume. I call it double volume. Again, the I detect double volume. I'll get into that in a second. See my first video. I wanted to do show you the big picture of this. This is TECL from Direction. The TEC stands for tech, so these are just tech stocks like Amazon or not Amazon, but like my mind went blank. Like Apple. Anyways, it says 3 times. So in other words, it's supposed to have gains that are 3 times better than this tech stocks. So if you look at this, is almost a day's worth of data here. And if you look at the lower here and the upper there, it's basically 115 to 111. So the total gain in one day is like $4 out of 115. So it's only like 3 or 4%. So I don't think it's that good. But I want to point out how you can use these double volumes and momentums indicators to do day trading. Nonetheless. So this first part here, what I did was that this red lines is me describing the double, and you can actually see them a little bit. We'll zoom in, but the 2 blue triangles mean double volume. In other words, for 2 1-minute bars in a row, there's been way more average trading on these 2 candles right here. And we'll look into details, but basically, when I color the red triangle here, it means it thinks that the indicators say that the stock goes down, but the problem is the stock actually went up, and so all these people here that bought shares are going to lose money unless they wait and can sell later. So the stock went up, and then it came back down, and they sold, and they sold to this other level. So when the indicators say that the price should go down, but it goes the opposite, then what they have is what I call this unfulfilled downs. And so what you have to do is fulfill those down. Now you can see the 2 bars, 1 bar here and 1 bar there, barely. So basically what's going on in the big picture is they bought here and they got out here. They sold there. So basically what happened is, and then the second bar, they bought here and they got out here. So you have 2 levels of support line. Support line means it's going to, the price will come down, hit the support line, and go up again. It's like supporting it, holding it up. Okay, and you can see it goes down to the first support line here, then goes down to the second support line there, then it bounces back up, comes like down to the first support line, bounces up, comes past it. I don't know. I actually went past it a little bit. I don't know why. And then shot back up again. Okay. So very important. These are actually kind of cool ways to predict what's going to happen. And if you can figure this out, so what these guys did was they got into the market hoping it was going to go up, and if it did go up, they'd make profit. Right. But I'm sorry, they got into this shorting and hoping it would go down, but it went up instead. Yeah, that's what happened. Red. They were going to short here. They thought it was going to go down, but instead it went up. So what they use this as an opportunity. You can use this as an opportunity that later on there is like low volume from here to here. What they're doing is the big spenders aren't going to buy stock. They're going to wait for it to come down to these support levels, and it hits this and this. They're going to get rid of their stock, and then probably people are going to rebuy in, and it's going to go back up again. So that's the big picture I wanted you to see. That's the important part about this. So here's the unfulfilled down, and then here is a fulfilled down, and here's another fulfilled down, fulfilled down, fulfilled down. So basically what it did was it fulfilled them twice. Now everybody's got rid of the stocks that they would have lost money on and bought new stocks that they would have made money on, and nothing holding it back. It's going to go back up again. Boom, there it goes. So So let's zoom in and look at the details. I think I can just go like that. So here's the stock at the beginning of the day, 6:30, and I'm looking for two blue triangles. I don't really see it here. I see a blue and a black, and the momentum's. The bottom row is volume. The second to the bottom row is momentum, and so during this blue and black triangles, two of them in a row. Ideally, should have two blues. So I'm not even trading here, but this does, since it's a blue triangle and a red momentum, the price goes down. Right? And then you have this one. So you have a blue and a green. Well, you can tell it went up. And then over here you got, but again, we're looking for two blues, and we haven't seen any two blues, so we're just kind of waiting. Here's a first chance with the two blues right there. And we'll zoom in. Alright, here's the first chance with two blues, and you can see blue. The second blue triangle is red, which says, hey, I think it's going to go down. And what happened is it didn't go down, it went up. So this is what I call two unfulfilled downs. There's this one, which is unfulfilled down, and then there's this one, which is unfulfilled down. So I drew these green support lines. And anyways, you look at the next bars. Again, there's no blue here, but just to notice that all the momentums are either black or green, and then you have black volumes, which is sort of like neutral. It's not low, it's not high. So the price is going up. People are buying and selling when you see the black triangles, and the green momentum says it's going up. And then it comes up to the top here and kind of goes sideways. I'm going to zoom in so you can see it. It's kind of going up here, and then goes sideways. And you'll notice that the second row is pretty much all black momentums, so it's going sideways. And I have this thing I say, prolonged sideways imply it's going to go down eventually. I don't know if that's true all the time or not, but what we do know is that we have these two unfulfilled downs right here, and so it's going sideways, and it has two unfulfilled downs. And then the volume part here, you have that one big volume. People are taking their profit, and that's the always here, taking the profit. They're gonna like, all right, it's a good time to buy, and sell off their profit. And then you see it's black momentum, like neutral. And then if you look at the volume after this one, it's like red or black, red or black. There's no greens. And since we have those unfulfilled downs over here, we know eventually it's going to go down. So it starts going down, and not really on any volume. It just starts going down. And some people aren't buying it because they don't want to buy it. They want to sell it because they have these unfulfilled. They bought here, and they have these shares that they don't want anymore because they can't sell to make a profit. Short them, I guess. So no one's buying anything, and so finally, since it's supply and demand and nobody wants it, the price starts going down, down, and it hits like the support line right here. It barely breaks through it. That's that support line, unfulfilled one. So this would be a good place to get in because it hit the support line. And then if you look here, you don't have two blues in a row, but you have a blue, a red, and a blue. So this is going to tell you that, hey, there's two of the three bars, there's strong volume, and there's kind of it's either green or black. So And also, you notice the green triangles. That the green triangles are RSI. So this says it's going to go up, and it does a little bit up, but and then it goes down, and then it comes up again. So in order, this green one here, in order to be fulfilled, this is where it get fulfilled over here. So this is the shares that people bought, and which eventually drove the price up. So when you see this green, in order to fulfill the green, you have to go up. It has to go up, and that's where it's fulfilled. So if you would have bought in here, and initially the price went down, and it went down because it had to hit the second fulfillment support line. It went down, broke through the support line, and then started going up again. So you're okay. Does that make sense? The reason I highlighted this is because you have to zoom in to see it. If you look at the squares are black, 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 green, black, red, red, black. So most of them are either black or red, which means the momentum is sort of like not very good, blah, neutral, and so you could expect the stock to go down. That's why I colored it a red rectangle here, because you don't get two blue triangles in a row, but over here you do get a black and a blue, and the momentum's red. So it's going to go down. You would expect it to go down to the second support level at this point. It's going to go, they say that tested the support line here, went back up, and then went through it the second time. So if you're up here, kind of up here, you would expect it to go down from here to there. In this case, it's 112 to 1. I don't know. It's not much money. So these aren't anything major, and you wouldn't expect them to be anything major because there aren't any two blues. So this dip here is not a major dip; it's a minor dip. But compared to the big picture, if knowing that these two guys are unfulfilled, if you would have bought in the sideways part up here, you could have got money down here, and there you would have made money, because you could see this black momentum neutral, and you know it's going to go down to fulfill these guys, so you could buy it up here and also buy it based on this stuff, and then sell it down here, and that would be a major, like 112 to 113. You would have made $1 a share, but it's only like 0.5%. So the important thing here I want to teach is this stock doesn't make lots of profit like the other one I did do, but what it does do is it again confirms what I've been talking about. Just more stuff. I think that's good enough.